Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we've been on a bit of a roll, I have to say, for the portfolio this year. The most recent trade that you did for the portfolio was a long of Coronation. How's that working out? Quite well.
It is. It's working out very well for us, and I'm happy to stay long here as things stand at the moment. If you have a look at the screen at the moment, you can see the charts of Coronation up there as it stands. This is now the last 6 months worth of trading action in Coronation. And what we identified last week was that the stock had been consolidating over the last 2 months or so, and it had been consolidating into what we call a falling wedge pattern. And you can see it identified there by those two trend lines that I've drawn on the graph. And a falling wedge pattern like this typically is viewed as a continuation pattern within a rising trend. So in this case, the share price came in from the bottom left, and it rose, and then it consolidated into this falling wedge structure. Now, the high probability likelihood always is that these things will break out in the direction of the prevailing trend. In other words, it'll break to the upside. Around about 2 out of 3 times, a structure like this breaks in the direction of the prevailing trend. And that's what we've seen now. You can actually see it having broken out to the top side of that falling wedge structure. Now, last week we did a trade for the portfolio. We bought 1,250 CFDs in Coronation at R101.90. At that stage, the breakout hadn't actually occurred, but we had enough of a reversal and it was oversold and whatnot. There were plenty of other signals for me to think that it was going to break to the top side, which it has now done. So we went long at R101.90 with a stop loss at R97.50. And I'm looking for a target here of R115. And that target basically is that dotted line up there, which represents the previous highs that we saw in December last year. That would be my first target for this share price to go to. And look, there's a fair chance that it might actually go beyond R115 ultimately as well. But that's my first target. And you can see our risk to reward ratio identified there by the red block and the green block. So the red block is the risk. That's the difference between where we entered the trade and where our stop loss would throw us out. And then the green block is the potential reward, that's the difference between our entry price and where our first target is.
And I remember you saying at the time it's underperformed some of the other market-sensitive shares like Liberty, like Sanlam. And Sanlam, in fact, was a pretty good trade for the portfolio too. Yeah. And with markets, I suppose, close to all-time highs, you would expect that to reflect at some point in Coronation itself. Very much so.
I think that this, I'm confident it's going to R115 to go and revisit those previous highs and quite possibly beyond that, actually.
Okay, so you're long of the stock and you remain within it.
Happy to stay in it at this stage, yeah.
And it's nice when things work out straight off. So long may it rally. Yeah. Garth, but there's another trade this week for the portfolio, and it's Naspers, which is a stock that you have traded quite nicely before, although we haven't ventured back into it for a long time and unfortunately missed out on last year's gains. But tell us why you're looking at it.
Yeah, that's right. I mean, I suppose in retrospect we should have just bought it the first time we ever bought it and just left it because it's done so well since then. It continues to provide nice trading opportunities, and we're seeing one right now. This is a trade that I actually initiated for the portfolio on Friday last week. Subscribers to traderscorner.co.za will have gotten the heads up on this trade that we were doing it and that this was what we were seeing here. But let's have a quick look at it. You can see the stock is trending up. There's no doubt about that. Naspers remains one of the strongest stocks on the JSE. And quite similar to that Coronation chart that I showed you, notice this falling wedge structure that we've identified here over the last couple of weeks or so. And what's actually very interesting is there are many, many shares in the domestic sectors on the JSE that are looking like this, where they're making these consolidations, either a flag or a wedge type structure. There's stacks of them out there on the JSE, which is interesting. And it's all mainly in the financial and industrial space of the market, but plenty of these consolidations which look as if they're all imminently about to break out. Anyway, let's focus on Naspers here. So you can see that falling wedge structure that I'd identified there. What's also very, very interesting to note is look at the stochastic oscillator there and notice how oversold that is. And it's quite rare for Naspers to become as oversold as it is now. But what's also particularly interesting is notice what we call bullish reverse divergence here. So the stochastic oscillator makes a lower low, yet the price actually makes a higher low. So what it's telling you is that this time around on this pullback, the share is even more oversold than what it was on the previous pullback. And that's actually a very bullish setup. And usually that does give rise to a fairly sharp move in the direction of the trend, which in this case is up. So we're looking for a sharp move here. We're looking for Naspers to basically go back up to the previous high and potentially beyond that. And I want to show this on a more zoomed in chart. I mean, this what I've shown you here is a daily chart that looks at about the last 5 months worth of trading activity. But now this is an hourly chart that effectively goes back over 1 month. And this is actually a screenshot off of my IG Markets trading platform.
Yeah.
So if you're a client of IG, this is exactly what you can pull up. You can pull up a graph like this yourself on the platform. And notice here's the wedge that I was talking about, obviously more clearly defined now because we're looking at hourly candles, so that every plotting there represents 1 hour worth of trade. And it's far clearer to see that falling wedge structure over there. Now, I went long on the breakout on Friday last week. We were looking for a break above 1,640 Rand. You needed to be quite quick and get in on the action quickly. I managed to buy some at 1,643 Rand. My stop loss is 1,618 Rand, and my target here is 1,740. That's my first target. So just to put that into context, the red block again represents the risk. That's the difference between where we enter the trade and where the stop loss would throw us out. And then the green block is the difference between where we enter the trade and where our initial target is. The 1,740 target that I talked about basically represents the previous high that we saw for Naspers, which was set on the 30th of January. And I think it's quite feasible that it's going back there, and also quite feasible that it's going to go beyond 1,740. You can make a case for it to actually go even higher. So I think once it gets to that profit-taking area, I'll then assess it. I might bank some of the profit, or I might just put a trailing stop loss in and then ratchet that trailing stop loss up, to work below a daily prior day's close. And try and run the profit if it should go beyond 1,740.
Garth, are there any fundamental factors that draws you to Naspers in addition to the technical setup?
Well, I think not specifically really. I mean, other than the fact that Naspers is a stock that's got a hell of a lot of good upward momentum on its side. Fundamentally, I know all the arguments that it's expensive, etc., but it is also growing its earnings at a very rapid rate as well. So there's some justification for the high PE ratio. But I know there are guys out there who say, well, it's too expensive. But quite honestly, you could have made that same argument when it was 400 Rand 2 years ago. And you've missed out on a lot of upside. So as traders here, we're most concerned with the momentum and looking at the charts. And that chart to me is extremely bullish. Stripping out all the fundamentals, stripping out the fact that you might think it's expensive, etc. To me, this is a chart that looks like it's got upward momentum on its side. So I'm happy to do this trade. And of course, if I'm wrong, well, then we have a stop loss.
Yeah.
And we know how much we're going to lose if we're wrong. It's not going to be a lot.
Okay, well, take us through the mechanics of the trade in greater detail.
All right, so I've gone long at 1,643 Rand per share. The stop loss I'm using is 1,618 Rand. The risk per share is therefore 25 Rand per share. Right, I'm risking 1.5% of our account on this. So at the time I did the trade, we had around about 280,000 Rand in our account. So 1.5% of that is 4,200 Rand. That's what I'm willing to lose if this trade goes wrong. So to calculate our position size, how many CFDs do we buy in order to effect this trade? Well, I take that capital risk of 4,200 Rand and I then divide it by the risk per share of 25 Rand. And it gives me a number of 168 shares. So for simplicity and to round it off, I've done 170 CFDs here. And that's what I bought for the portfolio this week. The target is 1,740, as I mentioned. And that therefore means that the risk to reward ratio on this trade is 1 to 3.88. So it's a good risk to reward ratio. I always look for a risk to reward ratio of 1 to 3 or better than that if I can. So this certainly fits the bill of a good trade.
Okay, so you've enacted that, and just 1.5% of the portfolio, is that because you've got a couple of trades running, therefore you would risk a little bit less because you don't want to get too stretched?
Yeah, that's the one thing. I mean, the other thing is that our top 40 overall index is sort of bumping up against fairly significant resistance. So I did want to just be a little bit cognizant of that as well, and the fact that the overall market is quite stretched at the moment. But I'm not going to let that deter me from doing a trade, but I did feel on that basis, let's just pull back the risk slightly. We are exposed already. We've got Coronation Long, now we've got Naspers. I'd like to have room to do 1 or 2 more trades if I can, but also recall we've got an options structure in the background working for us, and that also does tie up a little bit of capital as well.
Okay, Garth, when you talk about potential trades that you'd like to look at, there is one stock that you've flagged for this week to look out for, and that's Mediclinic. Yes,
Mediclinic's also been performing phenomenally well over the last number of years. And you can see, particularly over the last 3 months that I'm showing on this graph here, there's quite a well-defined upward trend there. We saw a massive move higher recently when the Swiss National Bank cut the peg on the Swiss franc. Remember, Mediclinic has hospitals based in Switzerland, so a stronger Swiss franc translates into better rand earnings when you translate that back into South African rand. So hence the strength in the share price. Anyway, what are we looking at here? Well, that uptrend is very clear to see. It's been steadily moving its way higher as each time the price has pulled back. There's quite strong support here, lateral support, at about 120 rand a share. And what's also evident is, as I said with Naspers and Coronation to some extent as well, it's another one of these cases where we've got this little flag or wedge type of pattern that's been forming over the last week and a half here with Mediclinic. And that's a healthy development. Look, we're not oversold on our stochastic at all yet, but effectively what I'd be looking for is either some pullback to about 120 rand and a reversal from that area, or alternatively, if we get a break beyond this downtrend over here, and that's at about 123 rand or thereabouts. If we get a break beyond that level, then that would be a buy signal as well. And we'd then look for the share price to go up at least to the recent high at 130 rand, but quite feasibly it'll go beyond that, I think. So that's something to watch out for in the week ahead. And in fact, I know while we've been recording the show, it's actually started to break through that trend line, that downtrend that I've highlighted there. So it looks like the trade is on.
Okay, all right. Let's not miss that one. Garth, so what does the portfolio look like? Pretty cheerful, I imagine.
It's looking very cheerful. I mean, we're sitting with 295,000 rand in the portfolio. Recall that we start the year with 250,000. So we're only halfway through February, or just beyond halfway through February, and we're already up 18% for the year to date. So it's been a cracking start for the portfolio. Those are the positions that we have open at the moment. We've got our option structure. Then we've got the Coronation long trade where we're up 7,000 rand on that. And then this Naspers position, as at mark-to-market prices today, we're up 10,829 rand on that trade. So all in all, it's looking good. I mean, we actually haven't had a losing trade this year yet. So, touch wood, I don't want to jinx that.
No,
but so far, so good.
Come. Oh, I mean, we know they'll come.
Of course they'll come. Nobody gets all their trades right. So the losing trades are still somewhere out there. We just need to make sure that when they come, we don't lose too much.
Yeah, let's hope they're not all clustered in one road. Guys, just before we get to your courses, I know that you want to talk about the exposure, because actually, if you add it together, the exposure to Coronation and Naspers through the CFDs is quite meaty, isn't it?
It certainly is. So I wanted to just show this because I do get asked from time to time about the exposure and how does it work with CFDs and leverage and whatnot. So I've shown the exposure on each of those positions there. If you have a look at that slide. So the Coronation exposure is about 127,000 rand at the moment, and the Naspers exposure is 279,000 rand. So if you take those two together, it's actually just over 400,000 rands worth of exposure that we've got to those two shares. Yet our portfolio has only got 295,000 rand in it. So you can see that there's an element of leverage there. We're around about 1.4 times leveraged on this portfolio at the moment, which is not aggressive. I mean, we've been higher than that in the past, but it just illustrates the point that CFDs do afford you the ability to do this. With 295,000 rand of capital, we can take a far larger exposure to the market if we wish to, which we've done here.
Yeah. But you do still limit your risk, and that's very well defined, and you've got the stop losses.
Correct. Always. But, you've got to be careful with gearing and leverage, because if you don't know what you're doing with it, it can be very dangerous.
Yeah. Well, you talk about the Swiss franc. That was a case in point. Very quickly to end off with, Garth, your courses.
Yeah, I'm down in Cape Town this weekend, Friday and Saturday, and then the week after that, I'm in Durban. I'm doing CFDs courses and a high probability trading course. So anybody that would like to attend either of these courses, please email me, garth@traderscorner.co.za. And I'll send you all the details.
Great. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.